Hello and welcome to Money9 English's brand new show Companynama. I'm Shrestha Tiwari and here's a show which will keep you updated with the week's big updates related to corporate and startup world. Let's get rolling with the first episode of this show. Over to the corporate world. Adani Group has confirmed that it is participating in the upcoming 5G auctions. It said in a statement that the spectrum acquired through auctions will be used for private network solutions. The group is likely to spend close to 2,800 crore rupees on buying spectrum in the auctions, which will commence from July 26th. And this will be much less than that of telecom operators like Reliance Jio, Bharti Airtel and Vodafone Idea, as it is not going for consumer mobility but only private network solutions. Post this statement, all Adani stocks on Monday on 11th July were on a bull run and closed with an upside ranging from nearly 2% to 15%. June quarter earnings of large Indian information technology services companies have a somber beginning. HCL's EBIT margin at 17% declined 100 basis points sequentially and was at a multi-quarter low. Also, it was below the consensus estimate of 17.6%. TCS also missed consensus margin estimates. At 23.1%, TCS EBIT margin hit a multi-year low. A significant section of Go First aircraft maintenance technicians went on sick leaves for 3 days until 12th July to protest against their low salaries, sources have said. This came in just after majority of aircraft technicians at Indigo too reported sick and skipped work to press for salary hikes. According to the Indigo personnel, very few reported for their night shifts at the Delhi and Hyderabad airports till July 11th reporting sick, but staffers apparently took mass leaves to appear for walk-in interviews by rival Air India. Indigo has said that it has asked concerned technicians to report to the airline's doctor along with necessary medical documents to verify if they were actually sick. Similar stories reported across the sector, with technician salaries being low and COVID-19 pandemic that worsened the problem, with some airlines resorting to pay cuts. Renewable energy space is turning out to be the hotbed of investments as India's top conglomerates Reliance Industries, Adani, Tata and JSW are up for dominance. The four big shots will make an aggregate investment of nearly 4 lakh crore rupees in 5 to 10 years in the segment and are at various stages of discussions to borrow massively for their greenfield solar and wind projects, acquisitions and building manufacturing facilities. Banking sources say that strategic investments are being looked to meet their funding requirements. WIPRO Pari, the industrial automation business of WIPRO Infrastructure Engineering WIN, has acquired a Germany-based automation tech firm Hochrainer. Hochrainer is a supplier of automation technology and assembly systems for numerous global automation manufacturers. It has also said that a significant presence in non-automotive sectors. Bharti Airtel on Thursday approved allotment of 7.1 crore shares to tech major Google at an issue price of 734 rupees per share. Google will hold 1.2% of total post-issue equity shares of the company, Bharti said in a regulatory filing. In January, Google had already said that it will invest $1 billion in Bharti Airtel. Of this, $700 million will be up for picking up 1.28% stake at the country's second largest telecom service provider, while the rest will be for multi-year plans related to devices and other programs around digital inclusion. L&T has emerged debt-free after considering cash and cash equivalents in financial year 2022, a move that will help the engineering and construction conglomerate rekindle its earlier stalled buyback process. According to the company's annual report for financial year 2022, there was a net increase of rupees 2,164 crore in the cash balances of the March 31st, 2022 as compared to the beginning of the year. L&T would venture into the business through technology tie-ups and business partnerships. Further, it has also identified green hydrogen, clean energy technology and offshore wind as new growth avenues. The Directorate of Revenue Intelligence DRI has conducted searches at the premises of mobile company Oppo India and unearthed a customs duty evasion of 4,389 crore rupees by the company, according to an official statement on 13th July. Oppo India is a subsidiary company of China-based Guangdong Oppo Mobile Telecommunications Corporation Limited. The searches come day after the Enforcement Directorate conducted raids against Chinese smartphone manufacturer Vivo and related firms at more than 40 places across India in a money laundering investigation. On July 12, Saga Cements was seen as the front-runner for Andhra Cements, a JP Group company undergoing insolvency proceedings. Saga Cements, Jindal Polyfilms, Dalmia Cement and Khandwala Finstock showed expressions of interest. Paras had acquired 1,012 crore rupees in principal loans from Edelweiss, ARC and Karur Vysya Bank in September last year for 434.6 crore rupees. Acquisition by Paras was financially supported by Saga Cements. And Chennai-based Murugappa Group is once again entering the electric vehicle industry, this time with electric three-wheelers, tractors and more. It plans to enter the electric vehicle space through a newly formed entity, TI Electric Mobility, under the group company name Tube Investments of India, the bicycle major. TII has earmarked 200 crore rupees for an electric three-wheeler market foray. To begin with, TII plans to have a presence in both passenger and goods carrier segments of electric three-wheelers. The market launch is expected by the end of August or early September 2022. It plans for entry into the electric tractor market with a major stake in the electric tractor startup Celestia. Well, from all the corporate news updates this week, now let's take a quick trip to the startup world. Startup updates coming for you. A PwC India report reveals geopolitical instability appears to be taking a toll on the Indian startups, with the total funding declining by 40% to $6.8 billion in the April-June quarter. The decline can be attributed to a global slowdown, decrease in tech stock valuations, inflation and geopolitical instability, it added. According to another report on Economic Times, investors, founders and recruiters say marketing budgets for startups are getting slashed, layoffs are becoming commonplace, and founders and top managements are taking pay cuts and perks are being taken away, at least at some startups, for the time being. And Byju's is yet to receive funds from Sumeru Ventures and Oxshot that have committed to investing about $250 million in the edtech firm's latest funding round. The company attributed the delay to macroeconomic changes and said it expects this capital to come through by August. Meanwhile, founder Byju Ravindran has completed his personal investment of $400 million as part of the company's $800 million funding round, Byju said in a statement. EdTech unicorn Unacademy will go into cost-cutting mode, with a global business shutting down, founders and managers taking pay cuts and staff foregoing complimentary meals and snacks, according to creator Gaurav Munjal. Munjal has said that even though the SoftBank-backed company has 2,800 crore rupees in the bank, they are completely inefficient and that there are many unneeded expenses that may be reduced. The government has taken a serious view of alleged mis-selling of courses by edtech firms. Complaints against Byju's and group entities were highlighted during a discussion as the edtech leader caters to a large student base. According to sources, the Consumer Affairs Department aired its concerns regarding this and various other aspects during a meeting with edtech companies and its self-regulatory organization, India EdTech Consortium, on June 24th. Around 147 consumer complaints against edtech startups were received during the meet. Well, these were all the headlines that made it big this week in corporate and startup world. Hope you liked this episode of Companynama and got your weekly munch of news. That's all for today. It's time I take your leave, and this is me, Shrestha Tiwari. See you again next week with more news updates from the corporate and startup world. Until then, keep watching Money9.